welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma. With me is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. But before that, let's have a quick look what the markets are up to. So, Cheryl, the markets are really volatile today. But apart from the index, the key to watch is India VIX today, which is up at around 12% as of now.
Absolutely. A very good morning to you, Shrishti. And yes, not only today, while you were on leave, we were also tracking Nifty, rather India VIX at that point in time. And there was a sharp spike in the India VIX. In fact, today, India VIX has actually hit a 52-week high. In a short while from now, we will get Kunal's take. We got to Kunal's take on Friday as well on the volatility in India VIX. What does it mean for Indian markets? Today saw an intraday spike of approximately 16% or so in the last 1 month or so. Also, you've seen a very sharp spike come about in India VIX, and not only just 1 month. Ever since that we've had the pollings actually begin also, we've seen approximately 8% or so uptick coming in on the India VIX, I believe, if not around those levels. In the last 1 month, it's already been 44% or so. So that's the way how India VIX has performed. And if you look at the markets today, you have REC, PFC. That's a sharp knock on that RBI guidelines coming in. But of late, the last 15 minutes or so, recovery creeping in for those counters. You have CLSA that's come out with the note saying that REC and PFC are well capitalized. They don't expect any impact on the profit and the loss on back of this RBI guidelines. Only there'll be a drag on the capital adequacy. Also, they're saying higher provisions will only impact REC and PFC's impairment reserves and won't drag down their profits. So that's the take coming in from CLSA. And after that, you've seen actually the stocks actually see some sort of a recovery on an intraday basis. Broader markets is actually where the pain is pretty excruciating when you compare it with the benchmark indices. Your broader markets that actually gave up all of its gains first, approximately 1% of the day's highest point, both for mid cap as well as the small cap. In fact, for small cap, it was trading lower by about 2% from the day's highest point, but now they are trying to make some sort of a recovery, while the advanced decline ratio still tilted in the favor of declines. Let me take you through the list of gainers then. You have Britannia that's ruling the chart, 7% uptick coming in for Britannia, this after the earnings as well as a con call takeaways. Kotak Mahindra Bank reacting to the numbers, also upgrades coming in for brokerages. TCS, Infosys, IndusInd Bank are the other set of gainers, while on the flip side, on the losing end, it is Titan that's reacting to its number, 6% downtick for that one. SBI, Adani Ports, Adani Enterprises, NTPC are the other set of losers. So that's the way how the markets are looking like at this point in time. Good recovery creeping in for the markets at this point in time, at least the benchmarks, Shrishti.
All right, then that's about the markets then, and we will wait and see that how the markets react going ahead. Any further recovery is what we will be able to witness on the benchmark indices or not. But with this, viewers, let's kickstart taking all your stock-related queries then in the show. And today we have our two of our very special guests as well joining us. So we will connect with them in a short while from now. But before that, let's give you the understanding that how you can connect with us. So you can connect with us live on a WhatsApp number that will be flashing on the screen, on the top of your screen as well. And you can also write to us on our social media pages. That is the X as well as the Facebook page of ET Now. So let's get started, and today we have Kunal Bothra as well as Ashish Maheshwari with us joining on the show. A very good morning to both of you, and thank you so much for your time. The first query that I have that is coming in from Bhardwaj from Coimbatore, and this query is on NTPC. Ashish, what's your view coming in on this particular counter? Bhardwaj is holding 850 shares and his average buy price is 210 rupees. He wants to know, can he buy more at current market price, and he wish to stay invested for the next 2 to 5 years?
We see in the long run will be surely a good bet power stock, and the way power demand is going up in the country, and the way NTPC is also enhancing their capacities. We have seen in the last 6 months stellar performance in the stock price of NTPC, but in long run, I am also very bullish that this stock even has a potential next 3 years to become double once their extended capacity, even from green power, will be in place.
All right, moving on then, let me take this next query. Let's talk about Suzlon for a very, very short term. Srinath wants to know, Kunal, what should he do with Suzlon? 2,000 shares at a price of 39 rupees per share. He wants to know whether he should hold on to this and what sort of a target should he look at for Suzlon?
The stock seems to be stuck into a range from a very short-term view. I think 42.5 is the resistance on the upside, and then just around that 39 approximately is the support for the stock price. Since it's closer to the resistance and your time frame is extremely short-term, I would believe that between a range of 41 to 42.5 where the stock is trading, it's a good time where you can look to book profits.
All right, that's about Suzlon. We're moving on to the next counter, and this one is for you, Kunal. This one is coming from one of your fans, and he wants to, I can't get his name. He didn't, okay, he's Balaji, and he wants a view on Ease My Trip. He's holding 500 shares from a price of 48 rupees. Can he more at current market price?
Thank you so much for that. First of all, so on Ease My Trip, I think it's a very interesting chart, because I think over the last 1.5 odd year, the stock has actually been a lot more sideways, gone through a major time-wise consolidation, and it's a very high beta stock. So for a high beta stock to come back into this kind of a phase, we typically call this as a mean reversion, and more of a time-wise correction for the stock. So I would believe that it could be a good time where we look to start accumulating. The major supports on the short-term basis is closer to 42.5. 43 approximately for Ease My Trip. So I would believe that if possible, and in case if there is opportunity that the stock corrects closer to this 42 mark, that could be a much better zone to try and average out, but you can start nibbling some quantity at current levels.
Let me just actually mark what is exactly happening with the markets at this point in time. Like we mentioned, that we are seeing a steady recovery actually creep in. Look at REC; it has seen a recovery of about 8.5% from the day's lowest point. A strong recovery coming in for REC. Remember that this one was seeing a very sharp fall. You had PFC that saw a knock in excess of about 10%. But now that one also has seen a good steady recovery from the day's lowest point. I believe the recovery for PFC would be to the tune of in excess of about 5% or so from the day's lowest point. Apart from that, you've seen IREDA also see a recovery. Remember, all of these counters were hit on back of that RBI note that had come about over the weekend, or rather on Friday, and post that you see saw these counters actually falling in trade. But it is time for a big ET Now exclusive news break coming in, and I have my colleague Somit, who is joining in to tell us exactly what are the REC sources actually telling you with this regard. Somit, over to you.
Well, if you see, we had seen a sharp fall in the share prices of REC and PFC post RBI came out with the guidelines for higher provisioning for projects which are under construction. But now what we are hearing from our sources in the company is that these guidelines are still in draft phase and will be implemented only post there has been a consultation with stakeholders. But what is the more important part, that is what we are understanding from our sources, is that even if these new guidelines as it is, if they get implemented, it will not impact the profitability of the company, and that is what we are understanding from our sources. And also what we understand is that REC will not be required to do any more additional provisioning even if these guidelines get implemented. So even if these guidelines get impacted, there won't be any impact on profitability, no impact on ROE, that is return on equity, and also the company might not have to make any more provisions post implementation of these new norms, which means that their growth also, which was one of the factors that Street was understanding that the growth might get impacted, will actually not get impacted, because there won't be any additional provisioning required by REC to do post the implementation of these new norms. And hence we are also seeing some kind of a recovery when it comes to REC and PFC in trade currently, and this is what we are understanding from our sources in the company.
That is what the REC sources have told actually ET Now, that the RBI guidelines for now is just a draft guideline coming in, and a consultation paper will be there which is proposed from the next financial year and will be implemented only after consultation from stakeholders. But I beg your pardon, but Somit, what exactly spooked the markets? Because you saw both of these counters being knocked out of the trade, and also you saw a similar impact come in for most of the PSU banking names, isn't it?
Well, yes, the reason behind the fall earlier was the fact that a large portion of their AUMs when it comes to REC, PFC and IRD is towards under construction project loans. Around 20 to 43% is what analysts were expecting, and because of this higher provisioning requirement, the street was estimating that around 4 to 7% of their net worth could get impacted because of this higher provisioning. Now, the new higher provisioning was of around 5% as against the standard provisioning that we currently see of around 0.4%. And when it comes to PSU banks, the credit cost was expected to increase increased by around 15 to 20 basis points over FY25 to FY27, and that is because PSU banks have a high exposure to corporate and infra loans in their loan mix, and they're also more inclined toward capex and infra financing, and this could actually impact their medium-term outlook. But at least when we understand for PFC and REC, what we are understanding is that they are already provided for this amount, so no extra provisioning will be required, and there won't be any impact on the profitability, at least what we understand in case of REC so far.
Thank you so much for that, Thomas, for getting us all of those details coming in. REC sources telling ET now that the RBI guidelines are only a draft guideline as of now, consultation paper which is proposed from next financial year and will be only implemented after consultation with stakeholders. And what REC sources are telling ET now is that even if implemented, it is not going to affect the company's profitability, and REC has already provided for the same. And a similar sentiment or the view is being echoed by CLSA as well on that particular guideline, saying that higher provisions will only impact PFC REC's impairment reserves and won't drag down their profits. Both of these counters are actually well capitalized. Let me get a quick view coming in from you, Ashish, with regards to these draft norms, and especially what REC sources have told ET now, as well as what CLSA and all of the view that both of these counters are well capitalized. They are fine. It won't impact their profitability going ahead.
I agree on that because RBI is getting tougher and tougher on the lending arms we have seen on the banks and NBFCs, and now this infrastructure lenders. One thing we must not also forget that the power sector projects are quite in demand, and there's no as such need to panic that any project which they are funding will not get completed, because when there's more demand and less supply, why any project should stall? But I think this is just risk curtailment measures which are being proposed by RBI. And I don't think so companies like IREDA, PFC, REC, which are having so high capital adequacy ratios, etc., will get affected in short term. But anyway, news has come out, and as the stocks have come down, in fact, in my view, there will be good opportunity to accumulate PFC, REC, and IREDA in this fall.
Right, that's about PFC and REC getting the exclusive on both the companies, REC exclusive, and hence we are seeing the recovery on the stock prices as well. So we will track more on that front. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's put the spotlight on Raymond. We have Mr. Amit Agarwal, who is the Group CFO at Raymond, joining us on the show. Very good morning to you, sir. Thank you so much for joining us on ET Now. And let's talk about your quarter gone by. It was a strong one. Overall growth was largely aided by the real estate segment. So do you expect the strong booking momentum to continue even in the current financial year, that's FY25?
As a group, we have got three verticals, which are lifestyle, second is a real estate, and third is in engineering. You have seen, in spite of the challenging market conditions in the lifestyle business, which is the retail is not doing so well over the last whole year, except for a short period around Diwali time. The weddings have not been so strong. However, we still have been able to show a year-on-year growth on our apparel business, because as we move forward, we are doing more on casualization, the premiumization, expansion of the retail footprint. We have opened more than 200 stores in the last year. That has led to a branded apparel growth. And similarly, also, if I look at the real estate, as we continuously keep on adding projects after projects, be it Thane or the one which we launched at JDA, has helped us to grow to a booking level of almost 3,300 crores in the last year. And the engineering business, let me talk about that, because that is the acquisition of Mining Precision, which we did almost at the end of March, which for the whole year you did not see any revenue and profitability of that. But that business, again, has done extremely well for us. If I look at it, the revenues they have delivered is almost 900 crores with 140 odd crores of EBITDA. And going forward, there is a big growth driver there. So I believe that all our three cylinders, so to speak, are firing very, very well. We have great opportunity. The market is very, very good. That in the real estate, there's very good sales potential and the kind of the products which we deliver. Similarly, on the lifestyle business, as we progress on the demerger part, and which is the 9th of May. We have the NCLT hearing, final hearing on 9th of May. We will have demerged lifestyle entity. So I think the future is quite bright for the group.
All right, all cylinders firing very well. Hi, good morning, Amit. This is Shrishti also joining in. One of the segments that the street is really excited about is your real estate segment. And earlier you had mentioned the annual revenue guidance of 3,500 to 4,000 crores from this particular segment. Will you be still sticking to the guidance or any upgrade there?
Look, I had always talked about over the next 3 to 4 years that we would hit that kind of numbers. And we still maintain that. We are very confident that this should be achievable. If I look at this juncture, I have a 25,000 crore potential loan from a Thane land to be built over, let's say, 8 to 10 years, of which 9,000 crore is under construction. Similarly, at the same breath, we have signed more than 5,000 crore worth of JDA projects. 3 JDA projects have been signed. So to that extent, and the one at Bandra we have launched. So I feel very, very confident that achieving a 3,500 crore to 4,000 crore revenue over the next 4 years is absolutely feasible. And we are well on track for achieving that.
Right. 23% growth in the branded apparels segment. Has this growth momentum sustained so far in Q1 of FY25 as well?
I would not like to specifically talk about the Q1 because Q1 is impacted because of the significant heat waves which are going through. So people are not stepping out so easily to come and shop. Second thing also, what happens, Q1 normally used to have few days of wedding, and this year the number of days of weddings are very, very limited. So that also puts people not to go out and buy. But I think overall as a year, and we have always talked about that over the next 3-year period, we intend to double our apparel business with a kind of retail expansion. We have already opened new stores of more than 200 new stores, and we plan to open another 350 to 400 stores over the next 2 to 3 years. So I think very, very clear journey. And let me talk about our ethnics, which has been a very, very bright spot for us. We have opened more than 115 stores. As we stand today, we have 115 odd stores, and the product is very well accepted. So I think coupled with our branded Park Avenue, Raymond Ready to Wear, Color Plus parks, as well as the Ethnics by Raymond, we see a great opportunity in this segment that we can double the revenue on the branded apparel over the next 3-year period.
Amit, your branded textile and garmenting business, which contributes around 46% of your top line, there the growth has been a little subdued. Any early signs of revival, or are you looking to enter any new geographies to propel the growth out there?
So look, in terms of, let me first talk about branded textile. Branded textile is a main business on fabrics, which is the suitings fabric as well as the shirting fabrics. The suitings and the shirting fabric, and there's a lot to do with the wedding related purchases. Now, the last year, the wedding related purchases has been little muted, and therefore the impact has been that the growth has been marginal. However, what is important is to note that our focus on cost rationalization, product mix, development is so strong, innovation is so strong that we continue to, in spite of all challenges, we continue to maintain the margins. The margin profile continued to be very, very strong. Similarly, on the garmenting front, you look at it, I think we have been able to grow the revenue. Only in the last 2 quarters, there has been not such a stupendous growth on the revenue because of 2 reasons. One, in the 3rd quarter, there were some issues about the delay in shipment. And now in the 4th quarter, what happened, the Red Sea crisis has really pushed a lot of our volume. And that has created a little bit of an impact in terms of revenue recognition. But at the same juncture, we are very, very bullish and strong that our growth and capex, which we are putting in the garmenting business, as we talked about earlier, that we are putting almost 200 crores of capex in this business, and which will make an increase in the capacity by 1/3, taking us the 3rd largest suit maker in the world. And the China Plus One, I think over the next 3 to 4 year period, we are seeing this revenue to grow at least 15-16% year on year CAGR over the next 4 years. And the margin improvement, you should also see that there has been a margin improvement in the garmenting business. And I think our focus is also to see that we want to create stronger businesses. Maybe we will have a very clear path for a profitable growth. We don't want a growth which will lead only a revenue growth but does not deliver me profits. And I think that is exactly, if you see every business, we have become stronger, sustainable, long-term, profitable player.
Right, and on the top line, you have actually been growing pretty strongly, but margins are taking a hit, and this you could attribute to increased investment in the branding and the advertisement segment. Will you continue to invest in this segment heavily in FY25 as well?
So I think that's a very good point. And I actually, this is not the first time I'm saying. I have been saying this, that we believe as we progress in the branded apparel towards the premiumization part and the casualization part, telling the world that otherwise Raymond was considered more a very formal brand. Now, if you're moving into casualization, it needs to be communicated adequately. And therefore, we believe that every year compared to the normal spend on ad, we should be spending anything between 60 to 80 crores every year incrementally for the next 3 years on the ad, so that people become aware. As we continue to expand the footprint, we are already present in 600 cities. But we believe as the city is becoming larger, as things are progressing very well, our country is becoming so strong, the economy is growing so fast, I think what we need is to provide the shops, provide our EBOs right in the vicinity of a customer. And therefore, we think that between tier 1 to tier 4, there's a great opportunity for the retail expansion, which will continue to be opened and adequately advertised so that these kind of products are available. And therefore, we are very clear that we are not looking for a quarter to quarter, as I talked about earlier also, that when you asked a question about the quarter one, that we believe that we will create a long-term, sustainable, profitable businesses. And we are on the journey. And if you see, the margin improvement consistently has been brought into the apparel business. What it used to be 3 years, 2 years back has consistently improved. Similarly, we see in the garmenting business, what was the last year or the year before earnings or the margins has consistently improved. And I think we do not want to say suddenly a big spike and then drop. We want a consistent, slow improvement year after year.
All right, Amit, with this, we'll let you go on that. Thank you so much for joining us today on ET Now. So that was the management of Raymond's taking us through how are the earnings this time around and also talking about all the 3 growth engines of the company right now and sharing its growth guidance as well. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back and we'll be taking all your stock-related queries, so stay tuned. Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries, and let's continue the same. The next query that I have is also for you, Kunal. This one is coming from Siddharth, and he wants a technical view on 2 counters. Firstly is Birla Soft and the second one is HFCL. He wants to know, can any of these counters be added at current market price with the next 1 to 3 months time frame?
So, Birla Soft on one hand, I think is going through a sharp corrective phase. I think from 860, the stock has already come back towards 620 mark. Now, but interestingly, the volumes in the last 1 week has just gone up higher for the stock, which means we could be at a point where the stock may get into a bottom formation process. I would suggest that just keep this on the watch. You don't need to buy it immediately, but whenever the stock breaks past above a 3-day swing high, so that could be a first indication that a major bottom is in place, and if volumes accompany on the higher side, that could be an added confirmation for the stock price. You can keep it on radar. You may look to buy some quantity at current levels, but the higher confidence breakout could be when the stock confirms a 3-day swing breakout on the back of some higher volumes. HFCL, I would suggest an avoid at current levels because the stock has not yet completed its minor phase of correction. I think it should come back to that 90 to 95 kind of a territory in this leg of correction for the stock.
All right, this one is coming from Thomas George, who's writing to us from Kochi. He has 5 stocks. Out of that, he wants to know which one stock should he look to bet for the longer term, Ashish. And all of them are in the space of around power. One is Voltam, the other one is Power Mech, TD Power, Salzer Electronics, as well as CESC. Out of these 5 companies, which one do you think is a strong player fundamentally for the longer term?
One pick is going to be full-time transformers because first of all they are market leaders now in this particular segment, and over a period of time this has given very good return to investors because transformer is a commodity which is under good shortage. So these companies are having order book of almost 1 year time frame, and in fact for any new transformer if you want to buy now you have at least 6 months waiting period. So Voltam being market leader, though valuations are expensive, but they will continue to drive a higher valuation and is a debt-free company too. So Voltam is undisputedly number one. Second bet can be TD Power.
All right. Ashish, once again coming to you, this query is coming from Prashanjit Ghosh from Havra, and he wants a view on 2 large cap names, Reliance as well as L&T, since we are seeing that both of these counters are seeing some bit of a profit booking. But how do you see the medium-term outlook on this one, and can he go ahead and increase his exposure in any of these names right now?
Nothing wrong fundamentally, neither with RIL nor with LNPS. Only thing is, as there are a lot of basket selling which is happening nowadays in the market, and these are the large cap stocks where they first face the brand. So this is the reason these stocks have slightly corrected. But fundamentally, both companies are doing well. We have seen the last quarterly results also uh, about their robust performance, and I think this will continue. And in fact, any downfall should be used as a buying opportunity in these both stocks. So, in my view, gradually you can start even accumulating both of them.
All right, this one is coming from Reshma Bhatia. She has SBI as well as Vedanta. They form a major chunk of a portfolio, about 32% of a portfolio. So therefore, Kunal, she wants to know about SBI. She's earning 100% gain in that particular holding. Should she sell half of them and keep the remainder as free stocks? And the other one is Vedanta, 30% gain. Should she book profits or hold?
Yeah, I think it could be a good strategy when we look to book out 50% profits on SPI, but don't sell the entire quantity. Even though I think there could be a point where the PSU banking stock may get into a mild corrective phase, but because your cost price would be significantly lower, I think you have a huge buffer at play for SPI. And I would believe that the long-term prospects look very attractive. So maybe after this patch of correction, the stock should make a ideally strong comeback for itself. Vedanta, on the other hand, I would actually look to suggest booking out maybe 30% of profits only over here, because it's come out as a surprise, this move for Vedanta, because the stock in the last 2 months I think has moved from sub 300 levels to now 400 plus mark where it's trading right now. It's also on the verge of a major breakout. 2021-22 high for Vedanta was I think, if I'm not wrong, around 440, 445 odd mark, and I think the stock should be able to break past about those levels. That's where you can look to consider booking out additional profits.
All right, then moving on, and Ashish, coming to you for the next query, and this query that I have is on alkyl amines. Venkatesh from Indonesia has written to us where he's already holding over 100 shares and his buy price is 2,200 rupees, very close to, quite close to the current market price. But he wants to know, can he go ahead and accumulate it further, where he wants to stay invested for the next 4 years?
See, if you see, this is again a very underperformer stock after a series of good performance. Even last 1 year, stock has gyrating between 1,800 to 2,200 mark. So instead of this, I'll suggest you go for it if you want to remain in the same sector. Deepak Nitrite, this stock available at 2,500 rupees mark, and this has more potential to grow because the way nitric acid demand is going up. Again, Deepak Nitrite being a monopoly kind of player in this space will do well. So my suggestion will be exit alkyl amine and enter into Deepak Nitrite.
All right, this one is coming in from Sushil Kumar from Trichy, and at current market price, Kunal, 3 stocks that he's asked are good bet: IOC, Geo Financial, and Power Grid. You can choose to speak about either one or two out of them.
So I think when I compare the charts for all three of them, Geo Finance and Power Grid are the ones which are looking attractive. I've somehow over the last 2 or 3 months I've not seen more attractive charts for the likes of OMC. So I would probably skip that space. I would believe that they could be highly volatile, less trending, and I think that's where you could probably look to avoid these kind of stocks. Maybe these stocks could retest their March lows for themselves and go slightly lower. That could be a better point where you'll be able to reevaluate. But I think Geo Finance as well as Power Grid are the ones which are looking attractive. Geo Finance specifically, of course, the chart history is limited, but the stock still seems to be having very good support at the 340, 360 kind of a trading zone. So I think if in case that stock gets closer to this kind of a support territory, you may look to accumulate. Same would be the case with Power Grid. The stock seems to be coming back into a strong breakout mode. Low beta name, and I think that's where it also has that advantage to try and shield when the markets get a bit more volatile, like what we've seen over the last couple of days.
All right, Kunal, once again a query for you. This one is on Can Bank. Since we see all these PSU banks are under pressure today, Sunny is holding 100 shares from a price of 617 rupees. He wants a short-term view on this particular counter. What should be his strategy? And he has no issues staying for the long term as well, if you advise him so.
I would suggest that if it gets closer to say 605, 610, 615 kind of a range, then I think on the spot levels, I would believe that that could be a territory where we look to consider booking out profits or exiting the stock, because the concern for Canara Bank is that the trend line support. So if you draw major trend line support from the Jan lows or which was around I think 440, 445 mark for Canara Bank, the stock today has managed to break below those key support points, and this is the second retest towards the trend line for Canara Bank over the last 1.5 odd month for the stock, which means we are getting into a point where the stock is consistently testing its key support trend line. Eventually those support trend lines, they generally break and you see the stock get into a corrective phase. So I would believe that a mild bounce back from current levels 605 to 610 could be a territory where we look to exit the stock and look to buy back lower.
All right, this next one is coming in from Arvind Reddy, who's writing to us from Hyderabad. He has Nalco Ashish at a price of around 170 rupees per share, 500 shares of Nalco. He wants to know whether he should book profits or hold on to this particular counter. What's your take coming in for Nalco? Are the prospects looking bright, or just this minimal profit that our viewers making is worth it, and just should he exit, given the fact that Nalco and all of these metal counters are also very volatile, dependent on what happens globally, isn't it?
Yeah, they are volatile, but still there's an uptrend there in commodities prices. So we have seen zinc, aluminium, nickel, copper, all are touching almost their 50 high. And there's a good demand of base metals in China, which is picking up of late. So in my view, we can continue to remain invested in Nalco with a price target of maybe 200 in next 3 to 4 months time frame. I am bullish as far as base metal sector is concerned.
Okay, Ashish is bullish as far as metals are concerned, but moving on, and Kunal, the next query is on LIC Housing Finance. Girish Iyer is holding 10,000 shares from a price of 677 rupees. Since the stock is down today and he's currently at loss, what to do in this one, and what is the expectation that the stock can come back to his buy price and give him some positive returns as well?
See, I don't see that happening immediately for LIC Housing, but don't be disappointed because the stock still has a very attractive chart on the medium to long term time scale. So I think over the last 12 months or so, the stock has recovered quite well from I think 300 levels, approximately 300, 375 approximately. The stock has come back towards a very strong breakout mode. 675, 680 was the recent high for LIC Housing, and that's been more of a consistent chart pattern. It's just that because the markets have subtly become volatile, even stocks have to adjust to this volatility and come back towards a mean reversion or a support point for themselves before they continue to move up higher. So I would believe that this could be a mean reversion process for LIC Housing. Since you've bought a higher quantity, what I would suggest as an offset, maybe you can try to create a covered call position. So by that I mean say closer to 675, 680 if the strikes are available for LIC Housing. Look to create some short positions on the call option so that you can probably get additional premium and keep on standing out with the the cash quantity which you already have of 10,000.
Right. Kunal, coming back to you from this one is from Anto. He's writing to us from Kochi and he wants to know about PTC India. 2,000 shares at a price of 194 rupees per share. He wants to know whether he should hold or look to exit.
I think you should continue to hold on. The stock still looks very attractive on the charts. It's formed a bullish flag formation on the daily as well as on the weekly time frame. The breakout for this stock is around 238. So, if in case in this round of the market trend, if the stock completes this breakout about 238 mark, we could be at the cusp of a bigger breakout for PTC India. So, I would suggest a hold.
All right, on PTC India, that's a hold. We're taking a look at the markets. Nifty 50 is once again flat right now, and Nifty Bank is also off the day's highest point as well. But with this, it's time to jump into a very short break. Viewers, don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of the stock related queries. This one is coming in from Milab, who's writing to us from Kerala. He wants to know about Nifty options, Kunal. 22,800 call option. The buy price is 52. He wants to know what should he do.
I'm not sure of the current price for the call option, but I'm assuming it's for the current week. So if both the assumptions, I'm working with this.
Written.
Exactly. So I think in that aspect, I would probably not expect the index to move up immediately on the higher side, because what's actually happened is that the VIX has gone up significantly higher, and when the markets have gone to an adjustment of a risk, adjustment of VIX, the risk comes down significantly, and whenever that happens, the market gets into a corrective phase. So I would probably believe that we should be more range bound. If you can, then probably maybe look to create a strangle of sorts. So 22,800 is the strike on the call side which you have. So you can probably offset that by creating maybe some sort of positions on the put side, so that you can probably offset in case if the market gets stuck into this 500-600 point range.
All right, then moving on to the next query that I have is on that is coming from Gayatri from Tirupati, and Kunal, she has 33 shares of IOL from a price of 470 rupees. What's the view on this particular counter?
So I'm assuming it's IOL Chemicals, and the stocks so far seems to be still on the weaker chart trend. In the last 12 months or so, it's corrected from 500 levels to 350, currently bounced back to the 380, 389 mark. Nothing major in terms of the chart patterns. So you may probably look to hold on to the stock, but nothing exciting. So would not suggest to average the stock at current levels.
Right, this one's coming from KV Singh, writing to us from Chandigarh. This one's for you, Ashish. No doubt he's asked about Bikaji Foods, wants a 6-month target for this one. But let me take this to you, given the fact that the chart history will be limited for Kunal to talk about Bikaji Foods. 400 shares at a price of around 390 rupees per share. Our viewer bought it a year ago. Should he go ahead and book profits or continue to hold on to Bikaji Foods? What's your take coming in on this one?
In FMCG pack and the way consumption is increasing of these particular products and the way they are expanding, I think they will command their own premium. So in my view, you can continue to remain invested as well as quarterly performance is there. They are consistent with their numbers. So it's a hold in my view, and you can keep a price target of 600 rupees in next 3 to 6 months.
All right, then, Ashish, your view on CG Power. Venkatramani wants to know, is this a right time to buy CG Power for the next 1 year?
See, as I told you earlier also that I'm very bullish as far as power sector and power ancillary stocks. So CG Power being one of the major producer again transformer and electrical equipment, we continue to do well. So no wonder the stock is near 52-week high. And in my view, it has full potential to even touch 600 rupees in next 3 months once the quarterly numbers, etc. are out. So remain investor, and even you can freshly invest also in this stock even at this price.
Right, with that, let's kickstart with the rapid fire. Then the first query coming your way, Kunal, from Salu, who has Reddington 75 shares at a price of 222 rupees per share. In loss right now, should average, or what sort of a target should he keep in mind?
I'll definitely recommend to hold on, but averaging out you can do if the stock falls sub the 200 levels.
Kunal, one more for you. This query is coming from Musha. Wants to know, is this the right time to buy REC and PFC? We have already covered the exclusive news flow on REC, and both the stocks have recovered from the day's lowest point.
Yeah, it could be a good point where we look to start adding on to both of these names.
All right, Tata Tech is the counter. IPO price of 90. IPO price 90 shares for the next 2 years. Ram wants to know, is it a hold? What's your take, Ashish?
It's a sale in my view because they have under-delivered this month. I'm not expecting any big way to the new contracts also. So it's definitely.
Okay, Kunal, your view on J&K Bank. Alok has bought 5,000 shares from a price of 131 rupees. Is that a hold or sell?
Continue to hold on, keep trailing stop loss as cost.
All right, this one is coming in for you, Kunal, from Vishwanath Nair. Wants to know at what price should he look to enter RailTel and Senco Gold. Either of them a buy?
So both of them are a buy. I think both of them have gone through a sharp correction. So good price, very quick to start adding.
Okay, Ashish, your view on Tanla platform. Chandrasekaran is holding 100 shares from a price of 1,220 rupees. Is that a hold or any dips? Can he go ahead and add more of this stock?
No, it's a sale in my view.
Now, Swati wants to know KFin Tech and Piramal Pharma, any entry price for a period of 2 years?
Piramal Pharma specifically, I think maybe closer to 144, 145 could be a very good buy price.
Alright, the next query that I have is from Santosh from Bangalore, and Kunal, he wants a view on CEAT as well as Balakrishna Industries. Any stock that you like for the long term and where he can make a fresh entry?
So Balakrishna Industries could be attractive. The stock has gone through a sharp correction. I think at prices of 2350 could be a very good entry point.
All right, with that we come to the end of the rapid fire as well as the queries. Thank you so much, Kunal, as well as Ashish, for joining us on the show and also waiting by patiently while we spoke to the Raymond management. But viewers, with that we come to the end of this edition of Buy Now Sell Now. Goodbye from Shrishti, myself and team to put the show together. Stay tuned. Markets at Noon coming up next.
If you like this video, then like, share and subscribe to ET Now.